What are the top CD rates out there in September? And what other fixed income instruments might you also want to consider? Hello, members and super savers. I hope you're healthy and well. And welcome back to our monthly top CD rates video. Because even if you don't plan on switching banks or credit unions for the latest best CD offer, it's still good to know what rates look like in the market currently and what you might be missing out on or not. As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. So, CD rates appear to be holding stable once again as we head into the month of September. The top CD rate we've seen so far this month is actually the same one from August, from a credit union with specific membership eligibility requirements. As I've also mentioned in our previous videos, if you're currently a credit union member, it may make sense to check with your specific credit union first to see what they're offering, because some of the best rates we've seen in recent weeks have been from credit unions. If, for whatever reason, you prefer not to bank with credit unions, or if you don't qualify for specific credit union's membership, don't worry. The other top CD rates on our September list are from institutions where you can simply open an account online and purchase your CD, so long as you meet their minimum deposit and documentation requirements. So, let's dive in now, folks. So, here are the top 2 CD rates for September as we kick off the month. As I mentioned, we've already shared this top credit union CD offer with you in August. The 7.19% APY 7-month CD from Alpena-Alcona Area Credit Union appears to still be holding pole position as we kick off September. So it's worth mentioning for those of you who haven't seen this yet. To qualify for membership with Alpena-Alcona Area Credit Union, you need to reside, work, own real property, attend school, or worship within any county in the state of Michigan. Some of the Michigan folks in our community have jumped on the CD offer after watching our initial video on Alpena-Alcona Credit Union and have returned with positive feedback. There is a minimum balance requirement of $500 to qualify for the CD offer and a maximum deposit limit of $7,000. Plus, there is a penalty for early withdrawal. Coming in at second place is a 6.17% APY 11-month CD from Guardian Credit Union. There is a minimum balance requirement of $10,000 to qualify for the CD offer with no maximum deposit limit. To qualify for membership with Guardian Credit Union, you need to live, work, worship, or attend school in one of the 14 counties that they serve in Alabama. These 14 counties are listed here on their website. The great thing about this CD is that it's a no penalty CD. Now, even though there is no maximum opening balance for this one, our general recommendation is to always stay below the standard deposit insurance thresholds. For credit unions, the standard share insurance amount covered under the NCUA is $250,000 per share owner per insured credit union for each account ownership category. For banks, the standard FDIC threshold is $250,000 per depositor per insured bank for each account ownership category. If you're interested in either of these top credit union CD offers, I've linked both of their websites in the description below for easy reference. For those of you who are newer to us and not familiar with Raisin, Raisin is the rebranded version of the old Save Better. Basically, an online marketplace where you can access deposit products like savings accounts, money market accounts, and CD accounts. CDs purchased via the Raisin platform are FDIC or NCUA insured. And if we scroll down, we can see that the top CD rate on Raisin currently is this one here, also being offered by a credit union. There are a number of other CDs below this though, with very similar APYs, but different terms and from different banks and credit unions. So you can select the CD that best suits your criteria. Keep in mind, you do need to open an account with Raisin to take advantage of the CD offers from their website. If you're interested in learning more about how to do this with Raisin, as well as how FDIC and NCUA coverage works when you purchase a CD through their platform, check out this deep dive that we did on them earlier this year. For those of you new to brokered CDs, they're essentially the same as CDs that you'd buy from your bank, except that you don't buy them from your bank, but you buy them via a brokerage company like Vanguard, Fidelity, or Schwab. The top new issue brokered CD rate that we've seen so far is with a 5.6% APY and a maturity date of mid-December 2024 from JP Morgan Chase via Vanguard and Schwab. It is callable, though, with a first possible call date of March 15th, 2024, so in about 6 months. And it's callable on the 15th of every month thereafter. Here's what the top new issue brokered CD rates currently look like on Vanguard. Here's what those rates currently look like on Schwab. And here's what they currently look like on Fidelity. There's usually no fee for buying new issue brokered CDs with these 3 leading brokers. Check out these videos here for more details on brokered CDs, what to look out for with brokered CDs, and how to buy them from Fidelity, Schwab, and Vanguard. So, those are the top CD rates that we found going into September. Many thanks to all of you who've sent your CD updates our way. We've screened all of them to ensure that the best made it onto our September list. If there's one you'd like to share with the other members and super savers in our community, do drop a comment below and let everyone know. Now, some final thoughts. Before you dive into these top CD offers for September, do note that CD rates change regularly in the current environment. As always, read the fine print to make sure you understand what you're buying beforehand. And another thing to keep in mind, especially if you're a Diamond NestEgg regular, is of course T-bills, which is our preferred fixed income investment of choice at this point. Here are the rates from the most recent T-bill auctions, which are also pretty attractive, especially if you live somewhere with relatively high state and local income taxes. Because remember, interest earned on T-bills is exempt from state and local income taxes, unlike interest earned on CDs, where you have to pay taxes on a federal, state, and local level. T-bills, while relatively straightforward, are nonetheless marketable securities that some may consider a bit more complex than CDs. So make sure your investment strategy is right for your individual goals, circumstances, and expectations. As I always say, everyone's financial journey is different. And for those of you who are ready to move beyond CDs and T-bills, who are looking for a bit more return with a bit more risk, I'd love to invite you to join our next live member Q&A on September 22nd at 5:30 p.m. Eastern Time, and to check out our latest member videos in the world of bonds. Supporting our channel through membership also allows us to keep producing one-of-a-kind, unbiased, sponsorship-free videos for the super saving community. Click the join button on our YouTube channel page or the link in the video description below for more details about Diamond NestEgg membership. All right, members and super savers, as always, I hope you enjoyed this video and learned something new. And if you did, don't forget to share this video with the fixed income fans you care about and hit that thumbs up, and see you again very soon with more brand new wealth building content for your financial journey.